Hey everyone, welcome back to Corporate Decoder. Today, ABRDN funds just filed their semi-annual shareholder report, and I am seeing a few things that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. This is a pretty hefty report because ABRDN Funds is not just one company, but a collection of many different investment funds. Think of it like a big umbrella with many different umbrellas underneath it, each with its own investment style. They filed a form N-CSR, which is basically a certified report of registered management investment companies. It covers the period up to the 30th of April 2026, and it gives us a peek under the hood of how these funds are doing. There are a lot of funds here, so we are going to zoom in on a few of the key financial details and risks. Let's start with the ABRDN SMA Completion Fund, which is for institutional investors. As of the 30th of April 2026, it had total net assets of $980,749. That's not a lot of assets for a fund, especially an institutional one. The portfolio turnover rate was 62%, which means they were buying and selling quite a bit, trying to keep up with market changes. Looking at the investments, their biggest holding by far was Samsung Electronics Co Ltd at over 13%. Then you have Tencent Holdings Limited at 8.1%. This shows a heavy concentration in tech and a few big names in emerging markets. Remember, having a few big holdings can be good if they do well, but it is also a big risk if they stumble. Next up is the ABRDN Emerging Markets Dividend Active ETF, or AGEM. This one had over $316 million in total net assets. A much bigger player, their portfolio turnover rate was 19%, meaning they are more hands-off than the first fund. Taiwan Semiconductor Manufacturing Co Ltd and Samsung Electronics Co Ltd are their top holdings, making up over 22% of the fund. This heavily leans on Taiwan and South Korea for their big plays. Then there is the ABRDN Emerging Markets ex-China Fund. The name tells you a lot about its strategy, avoiding Chinese companies. This fund had $228 million in assets. Taiwan Semiconductor Manufacturing Co Ltd was their top holding at 17.5%, followed by Samsung Electronics Co Ltd at 9.5%. It's clear that Taiwan and South Korea are major focuses, as 31.6% of the fund is in Taiwan and 24.7% in South Korea. Switching gears to domestic focus, we have the ABRDN Small Cap Equity Fund. This fund had total net assets of nearly $373.5 million. Their portfolio turnover rate was 31%. Their top holdings were companies like Everest Construction Group, Inc. and Materion Corp. The sector allocation shows a big chunk in industrials at 24.2% and financials at 20.7%, which is typical for a small cap fund looking for growth. Now let's look at the ABRDN Dynamic Dividend Fund. It had total net assets of $99.7 million. Alphabet Inc. Class C was their top holding at 4%, followed by Taiwan Semiconductor Manufacturing Co. Ltd. at 3.8%, and Broadcom Inc. also at 3.8%. Notice how tech-heavy this portfolio is, despite being a dividend fund, which is interesting. The ABRDN High Income Opportunities Fund is all about generating income, and it had $74.7 million in assets. Their credit quality allocation shows a lot in BB and B-rated bonds, which means they are investing in riskier, high-yield debt to try and get that higher income. Transdig Inc. at 6.625% due the 1st of March 2032 was their top holding, representing 1.4% of the fund. This is typical for an income fund where they spread out their risk across many smaller holdings. This fund focuses on short-term high-yield municipal bonds with total net assets of $29 million. It is interesting to see that almost 35% of their portfolio is not rated, meaning it is hard to get a clear picture of its credit quality. Colorado Health Facilities Authority at 3.5% due May 15, 2030 was their top holding. This is an exchange-traded fund or ETF with total net assets of $53.8 million. It's an ultra-short fund, meaning it aims for very low risk and is highly liquid. Their credit quality allocation shows a lot in AA and are rated securities, which is very safe. Port of Port Arthur Navigation District at 3.33%, due the 1st of November 2040 was their top holding at 4.6%. This fund is built for stability, not high returns. The ABRDN Infrastructure Debt Fund had $20.5 million in total net assets. Their credit quality allocation shows a mix of investment grade and below investment grade securities with a lot of BB and B ratings. Port of Beaumont Navigation District at 10%. Due the 1st of July 2026 was their top holding at 6.2%. This fund is taking on a bit more credit risk to try and get better yields by investing in debt linked to infrastructure projects. This fund focuses on sustainable investing with $314 million in total net assets. Their sector allocation is heavily weighted towards information technology at 37.6%. Nvidia Corp and Microsoft Corp are their top two holdings, making up over 17% of the fund. This shows a strong bet on the future of tech and companies that prioritize environmental, social, and governance factors. Digging into the overall financial statements for ABRDN funds, in the statements of investments we see a lot of detail. For the ABRDN Dynamic Dividend Fund, common stocks make up 100% of the investments. The total net assets of this fund are $99.7 million. They hold a significant amount of US stocks, nearly 58% of their portfolio. Looking at the ABRDN SMA Completion Fund, common stocks are 99.1% of their investments and preferred stocks are 1.8%. This fund is quite concentrated, with South Korea alone making up over 24% of its assets and Taiwan over 18%. For the ABRDN Emerging Markets ex-China Fund, common stocks are 97.4% of its investments. Again, we see Taiwan as the largest geographic allocation at over 31%, followed by South Korea at 24.7% and India at 12.9%. This fund is clearly staying true to its name by excluding China, but still heavily investing in Asian emerging markets. The ABRDN Emerging Markets Fund's common stocks are 93.9% of its investments. Taiwan leads their geographic allocation at 22.3%, followed closely by China at 21.3%, and South Korea at 20.1%. This fund is quite diversified across emerging markets, but still has a strong leaning towards Asia. The ABRDN Global Infrastructure Fund has 99.8% of its investments in common stocks. The United States represents 49% of its geographic allocation, showing a strong US focus for infrastructure investments. France makes up 9.3% and Spain follows at 6%. RWAG and Union Pacific Corp are among their top holdings. This fund is quite diversified geographically, but heavily focused on infrastructure companies. The ABRDN Real Estate Fund has 98.6% of its investments in common stocks, all of which are in the United States. They are heavily invested in healthcare REITs at 28.9%, followed by retail REITs at 23.5%, while Tower Inc. is their largest holding at 15.2%. This fund is a pure play on US real estate, focusing on specific REIT sectors. The ABRDN US Small Cap Equity Fund shows common stocks making up 99.9% of its investments, all within the United States. They are diversified across sectors, with industrials at 24.2%, financials at 20.7%, and information technology at 15%. Their top holdings are companies like Everest Construction Group, Inc. and Materion Corp. This fund is a pure US small cap play with a pretty standard sector allocation. This fund has 98.3% of its investments in common stocks and is heavily focused on information technology at 37.6%. Nvidia Corp and Microsoft Corp are their top two holdings, reflecting a strong conviction in the tech sector and its role in sustainability. The ABRDN High Income Opportunities Fund's investments are dominated by corporate bonds at 94.9%. It is heavily concentrated in the United States at over 61%. Their credit quality is mostly on the riskier side, with nearly 87% in BBBCCC and non-rated bonds. This is expected for a high income fund aiming for higher yields. This fund is focused on corporate bonds at 54.6% and municipal bonds at 43.4%. The US represents 40.2% of its corporate bond holdings, while the municipal bond side has a large allocation to Wisconsin at 10.2% and New York at 9.7%. Port of Beaumont Navigation District at 10%. Due the 1st of July 2026 is their top holding. This fund is mixing corporate and municipal bonds related to infrastructure to diversify its income streams. This fund is heavily invested in municipal bonds at 99%. Arizona accounts for 10.5% of its holdings and Florida takes up 21.6%. Their credit quality is quite mixed, with a significant portion being non-rated at 34.9%, Colorado Health Facilities Authority at 3.5%, due May 15, 2030 is their top holding at 9%. This fund is essentially a municipal bond fund with a focus on short-term higher yield debt. This ETF is overwhelmingly invested in municipal bonds at 98.2%. Alabama has a 7.5% allocation, Arizona at 3.4%, and New York at 4.9%. Their credit quality is heavily skewed towards AAA, AA, and A-rated securities, indicating a very low risk profile. Port of Port Arthur Navigation District at 3.33% due the 1st of November 2040 is their top holding at 4.6%. This fund is designed for stability and capital preservation. In the statement of assets and liabilities for the ABRDN Dynamic Dividend Fund, total assets were $100.7 million. Total liabilities were $922,000, giving us net assets of $99.7 million. The cost of investments was $67.3 million, with unrealized appreciation of $31.4 million. This suggests the fund is doing pretty well with its investments. The class of shares have a NAV of $5.07, while institutional class shares are at $5.07 too, which is standard. For the SMA Completion Fund, total assets were $1.36 million, with total liabilities of $379,000, resulting in net assets of $980,000. The cost of investments was $848,000, meaning there is a good chunk of unrealized appreciation on their holdings of nearly $200,000. The Emerging Markets ex-China Fund has total assets of $229 million, total liabilities of $766,000, and net assets of $228.3 million. The tax cost of securities was $139.8 million, with a net unrealized appreciation of $88.3 million. This fund is really doing well with its investments, almost doubling its cost basis in appreciation. The ABRDN Emerging Markets Fund has massive total assets of over $1 billion with liabilities of $3.5 million, giving it a net asset of $1 billion too. The company has a tax cost of securities of $752 million, but the investments are valued at $1 billion plus. They hold a lot of unrealized gains. With over $212 million appreciating in value, this fund is performing very well. The ABRDN Infrastructure Debt Fund has total assets of $20.6 million, with liabilities of $77,000, leaving net assets of $20.5 million. The cost of investments here is $20.1 million, so not a lot of unrealized appreciation or depreciation. This fund has total assets of $29 million with liabilities of $599,000, resulting in net assets of $29 million. Their tax cost of securities is $31.5 million with a net unrealized appreciation of $2.4 million. This indicates that their investments have lost some value on paper, but it is not a huge loss. Finally, the ABRDN Ultra Short Municipal Income Fund has total assets of $1.1 billion, with liabilities of $13.2 million, giving it net assets of $1.1 billion. Their tax cost of securities is $1.129 billion, and they have a net unrealized appreciation of $155,000. The abysmal number for the Dynamic Dividend Fund, the net investment income was negative for both Class A and institutional shares, a loss of 0.10 per share for Class A and 0.10 for institutional, and that is after expenses. This means the expenses are eating into more than they are earning. The SMA Completion Fund has a very low net asset value of less than $1 million. Their net investment income is also low at 0.14 per share for institutional shares. This is a tiny fund and it is not generating much income. The Emerging Markets ex-China Fund shows a net investment loss on both Class A and Class R shares at 0.27 per share and 0.26 per share respectively. This is a bit concerning and signals that the fund's expenses are higher than its income. The ABRDN Emerging Markets Fund is showing a net investment loss for all its share classes. Class A shares have a loss of 0.14 per share, Class C at 0.12, Class R at 0.15, Institutional Service Class at 0.15, and Institutional Class at 0.07. This is a concern as it means the operational expenses are eating into investment returns. The US Small Cap Equity Fund is also showing a net loss on investment income for all its share classes. Class A shares have a loss of 0.15 per share, Class C at 0.19, Class R at 0.15, Institutional Service Class at 0.19, and Institutional Class at 0.10. This indicates a broader issue with expenses being higher than income for these funds. The US Sustainable Leaders Fund is showing a net investment loss across its share classes. Class A shares have a loss of 0.01, per share Institutional Service Class at 0.01 and Institutional Class at 0.01. This suggests a trend of higher operational costs compared to investment income. The ABRDN High Income Opportunities Fund is showing a positive net investment income for both Class A and institutional class shares at 0.24 and 0.22 per S share respectively. This is a good sign indicating they are earning more than they are spending operationally. The ABRDN Infrastructure Debt Fund shows a positive net investment income for class of shares at 0.25 per S share and institutional class shares at 0.27 per S share. This is also a good sign showing these funds are profitable on the income side. This fund is showing a positive net investment income for its class of shares at 0.18 per S share, class C at 0.14 and institutional class at 0.19. This is good to see as it means the fund is generating more income from its investments than it costs to operate. The ultra-short municipal income fund is showing a strong net investment income across all its share classes. Class of shares are earning 0.1 per share, class RAT 0.1 and institutional class at 0.1 sen. This is excellent news, indicating a healthy income generation from its investments. Now, looking at the ABRDN US Small Cap Equity Fund, the statement of operations shows a net investment loss for all its share classes. For the 6-month period ending the 30th of April 2026, class of shares had a loss of 0.15 per S share, class C at 0.19, class R at 0.15, institutional service class at 0.19, and institutional class at 0.10, this loss in investment income is partly offset by the gains from investments and sale of securities. The ABRDN US Sustainable Leaders Fund also reported a net investment loss for all its share classes. For the same period, class of shares had a loss of 0.01 per S share, institutional service class at 0.01 and institutional class at 0.01. While the losses are small, they show a pattern where expenses are exceeding income from investments. The ABRDN Infrastructure Debt Fund stands out with a positive net investment income. For class of shares, it is 0.25 per S share, and for institutional class shares, it is 0.27 per S share. This is a testament to their strategy of generating income from infrastructure related debt. This fund is showing positive net investment income across its share classes, with Class A at 0.18, Class C at 0.14, and institutional class at 0.19 per S share. This shows their focus on higher yield during shorter terms is paying off in terms of income generation. The ABRDN Ultra Short Municipal Income Fund is performing very well on the income front, with positive net investment income for all its share classes. Class of shares are earning 0.1 per share, class R at 0.1 and institutional class at 0.1 sen per share. This is consistent with its strategy of aiming for income with very low risk. When we look at the notes to financial statements, especially the risk exposure category, we can see a lot of funds. For example, the ABRDN High Income Opportunities Fund and ABRDN Infrastructure Debt Fund are subject to bank loan risk, which means they are investing in these loans and there are risks associated with the collateral and repayment. The ABRDN Small Cap Equity Fund and ABRDN International Small Cap Active ETF are exposed to small cap securities risk, meaning investing in smaller companies can be more volatile. One interesting risk mentioned across several funds is cybersecurity risk. In today's world, anything can be hacked, and that includes financial data and operational systems of these funds. This is a real concern that investors should be aware of. The ABRDN Global Infrastructure Fund and ABRDN Real Estate Fund are subject to concentration risk. This means they focus heavily on specific industries. So if that industry takes a hit, the whole fund can be significantly impacted. The ABRDN Emerging Markets Fund, ABRDN SMA Completion Fund, and ABRDN Emerging Markets ex-China Fund are all subject to emerging markets risk. This is a general warning that investing in less developed countries comes with higher volatility, less regulation, and potential political instability. China risk is specifically called out for the Emerging Markets Fund and Emerging Markets ex-China Fund, highlighting currency fluctuations, potential expropriation, and the impact of public health threats. The ABRDN US Sustainable Leaders Fund faces sustainable investing risk. This flag emphasizes that relying on environmental, social, and governance factors might lead to different performance than other funds, and that the information used might be incomplete or inaccurate. What matters most here is the sheer scale of asset management involved. ABRDN Funds manages billions of dollars across dozens of different investment strategies. The financials presented, especially the net asset values, show the vast sums of money these funds are handling. What is interesting is that while some funds like ABRDN Emerging Markets Fund are showing strong overall gains, others like the ABRDN US Small Cap Equity Fund are showing a net investment loss. This highlights the importance of understanding the specific strategy and risks of each individual fund within this large family of ABRDN funds. The consistent mention of potential reimbursements of fees is also a point to watch. It indicates that ABRDN is actively managing expenses to ensure the presented expense ratios are attractive to investors. The biggest takeaway is the diversification on offer. ABRDN funds covers a huge range of investment types from high yield to ultra short munis, from global infrastructure to us small caps. However, with that breadth comes the need for investors to do their homework on each specific fund. What I am actually watching for is how these funds navigate the current interest rate environment, as it directly impacts fixed income and high income strategies stay decoded.